This week, markets were completely driven by the Federal Reserve and news from the Middle East, events that impacted gold, oil, and the dollar alike. As usual, let's start with gold first. Gold started the week near $2,330, but selling pressure increased, and by the end of the week, it reached around $2,170. What was the main reason for this drop? The Federal Reserve kept interest rates unchanged this week, but in its official remarks, it made clear that it remains quite concerned about ongoing inflation. There is no rush to cut rates at this time as the Fed is still watching economic conditions closely. This strengthened the dollar and put more pressure on gold, as high interest rates for an extended period typically make assets like gold less attractive. Now let's move on to oil. Brent oil just went through one of its most volatile weeks. Prices were trading above $85 at the start of the week, but dropped to the $80 range by the end of the week. This drop was due to easing supply concerns and market optimism regarding ongoing negotiations and reduced regional tensions. As a result, the market priced out some of the geopolitical risk that had previously been factored into oil prices. And now for the dollar. The dollar index performed strongly this week, supported by the Federal Reserve's hawkish stance. The market has received the message that interest rates may stay high for longer, which has worked in the dollar's favor. So, the summary for this week is gold was pressured by a strong dollar and the Fed's restrictive policies. Oil fell as supply and regional concerns eased, while the dollar remained one of the market's most important players. Next week, traders will focus primarily on U.S. inflation data and Fed officials' remarks, as these could dictate the next move for gold, the dollar, and oil.